the October high, which would clear this range with the momentum improving. If the RSI can push above 60, ideally get to that overbought region as we break out, that'd be a very bullish sign. That would basically say, no, this isn't a topping pattern. We're back to making higher highs and higher lows. I think that'd be very bullish. In the interim, for between 6,550 and 6,900, I think we're kind of neutral, right? We're sort of in that yellow light kind of period. So, thinking of this kind of, the index as a traffic light, and recognizing that, again, if you describe what you're seeing as super bullish or super bearish, I think if you take a step back from your monitor and just look, I mean, this is definitely a different market from what we had in July, August, September to what we're seeing in Q4. Q4 is more sideways. Q3 was definitely an uptrend. I mean, clearly, undeniably an uptrend of higher highs and higher lows. Q4, October, November, and now December is more of a sideways trend. This is more of a wait and see kind of market, I would think. So, if I'm long things, if I'm long the S&P, which I certainly am through a number of ETFs, I don't see enough reason to be really bearish or sell as a trend follower, because we're still holding support. A break below 65.50 would probably cause me to make some changes. If I'm bearish and we break above 6,900 on stronger momentum, I don't know how bearish I want to be if the market's breaking out, making higher highs and higher lows again, which is what we saw back here. But in the middle, I'm happy kind of waiting patiently for the market to communicate to me what's in store, what's coming next. So kind of thinking traffic light for the S&P right about now. Those are the levels that make sense to me. Watching the RSI, watching those levels that I shared with that traffic light. That's kind of the way I'm thinking about it.